If you want to rent your first flat in London or buy your first home or get a decent contract for the latest iPhone, there's one thing that stands in your way. It is your credit file. In the UK, a credit score isn't just a number. It's actually a digital CV, and it's a CV of your reliability. With interest rates still being a major conversation in 2026, the difference between a poor and excellent rating can mean saving £300 on a mortgage per month, which is literally a fat holiday every single year. Today, I'm going to show you exactly how you can start building your credit score from scratch in the UK. Unlike in the US, the UK doesn't have one single credit score. We have three main credit reference agencies. Number one, we have Experian. Number two, we have Equifax. And number three, we have TransUnion. Each one has a different scale. For example, a perfect score on Experian is 999 or 999, while on TransUnion it's 710. So don't obsess over the specific number, obsess over the report. Now, having a good credit score is so important in 2026 because lenders basically use open banking more than ever. They aren't just looking at your past, they're actually looking at your real-time spending habits. Now, a good credit score basically means that you aren't desperate for credit, which means you aren't desperate for credit. Which ironically is exactly when banks want to give it to you because, you want to be trustworthy, you want to be perceived as trustworthy with credit. So the main question is, how can you actually build a good credit score? And in the UK, there are 5 specific pillars. The first one, the electoral roll. This is the foundation, and this is the core one that everybody can do. If you are not registered to vote in England at your current address, your score will struggle to move. So basically, lenders use this to actually identify you and verify that you actually have a stable home. So it is important that you register to vote. Number 2, you need to have a payment track record. So if, for example, if you've ever missed a mobile phone payment or an energy bill, that will stay on your record for the next 6 years. In the UK, you have to be stable and you have to pay all of your bills on time. Number 3 is credit utilization. Let's say you have a credit limit of £1,000 and every month you're using £900. That just shows that you're using... Credit lenders will basically see that as you being stressed. You should aim to use less than 25% of your credit limit. The fourth thing that can have an impact is your account age. So closing your oldest bank accounts, whether it's a Halifax bank account or Barclays bank account, it is a mistake. Lenders love to see a relationship that has lasted 5, 10 or 15 years, so don't close old banks. And the 5th pillar is address stability. Moving house every 6 months, that makes you look risky to UK lenders. They prefer seeing you at one address for at least 2 years. Now, you cannot build credit without using credit. That is one key thing you have to understand. So the very first step to actually building credit is getting an entry credit card or, a builder credit card. So if your score is low, you might get rejected from the high street banks like, American Express and all of that. Look for a credit builder credit card. So examples of this come from like Capital One or Vanquist or Aqua. Their interest rates are pretty high, but you are never going to pay interest if you pay your bill off every single month in full. So I would use these cards. Don't spend a lot on them. Just put your normal bills, your normal grocery bills, but make sure you're spending it off in full make sure you're paying it off in full every single month. Just keep it to a minimum. As long as you have a record of the bill being paid off, that is great. The next thing you have to do is set up a direct debit. So essentially, the direct debit basically pays the statement balance off in full every single month without you having to manually pay it off. So this means you will never pay interest and your payment history essentially looks perfect, but make sure you have enough money in your bank account to pay the direct debit. The thing you shouldn't do is apply for too many credit cards. You should always use an eligibility checker first before applying, because the eligibility checker will tell you if you can actually apply first. This is something called a soft search, and a soft search basically means your credit score won't be impacted before you apply. When you do apply, yes, your credit score will be impacted if you do get rejected. So make sure you use an eligibility checker first. So now let's move on to the credit killers in the UK. What actually Number one. So to sum this video up, a credit score is so important, especially if you want to borrow money, whether it's for a house, a car, anything you need to borrow money on, you need a good credit score to reduce your interest. One missed payment can have a huge impact on this credit score and essentially affect your financial future. So if you are young and you want to build a good credit score, make sure you follow these steps in this video, including applying for a starter credit card, paying your bill off in full every single month, registering to vote, not utilizing more than 25% of your credit limit, and you will be fine. Anyway, thank you guys so much for watching this video. If this has provided value to you in one form, in one shape or another, it would mean a lot if you guys could subscribe, and I will see you in my next video. Bye bye. Fucking hell.